U.S. existing home sales fell below expectations for the month of February, dropping 7.1%, well off the 2.8% that was expected. Joining us for more on the numbers, and we'll talk a little bit about Canadian real estate as well. Jeff Taylor, he's the co-founder of Digital Risk. He joins us from New York. Jeff, let's talk about those numbers in the U.S., though. It was just 1 month, a lot of volatility on those numbers. What's your takeaway from them? They were existing home sales.
Yeah, I think there's two major takeaways, right? One is in the Northeast. Obviously, you had a very, very snowy winter or February, so it's very difficult to have open houses and have people actually moving inventory and weather like that. But the second continues to be the story we've been talking about for the last 2 years, which is very tight inventory. And so people are looking, but they're not pulling the trigger, and prices continue to rise a little bit. So that's been the issue, really. It's been a tight inventory, and month over month, it was more or less something affected by the weather.
So a tight inventory, that should be good for house builders because they got to build the inventory. What's the new home side of the equation look like?
You know what? So the home builders are in a very good spot, but they got to be very strategic where they build. Companies that I like are like TriPoint, heavy concentration in the D.C., Virginia area, also in Austin, Texas, California. They're thinking very smart about it and doing very well. Lennar, with its multi-generational family housing, that's a great solution for the affordability factor as far as what are you doing with the aging population right now. Those are two home builders that I like a lot, and I think they're very much poised for growth. But again, they have to pick their locations smart where they build, and they should have a good 2017, 2018.
It looks like when I look at sort of the pricing indices for home prices in the U.S., we kind of, since the financial crisis, we've taken a big step up and then sideways step up, sideways step up. I think we might be in a bit of a sideways generally move. How long does this housing cycle last in the U.S. in your view?
Well, you know what? It's a combination of a lot of things, right? I mean, if you would have told me again interest rates would be lower than they were after we had the Fed hike back in December, I would have said there's no way, but they are. So with interest rates still as low as they are right now, there's tremendous affordability. But the challenge is, where are they going to go ahead and buy these houses? What parts of the country, being new existing home sales or new sales? I think we still have a solid market in 2016. And we'll see what happens as interest rates start to rise in 2017. But for the U.S., I think we're in a very stable ground right now.
It's all about location and where you are. But let's bring it to the Canadian discussion. And it's been very hot in Vancouver and Toronto. I understand you're looking at the Vancouver market. And I've seen some interesting discussions on the other side of the border in terms of Seattle as well. But let's talk about Vancouver. What do you think is going to happen there?
So I think the Canadian market in general really is suffering from the drop in oil prices and energy prices. That's been an overlaying factor. But the Vancouver market specifically, what bothers me there is it's so investor and foreign capital driven that I think that you're going to have inflated prices. And I think that we could see a correction here. We're starting to see a little softness, and I think we could see a correction going on through later this year. So the Vancouver market's one that I'm keeping an eye on and worries me a little bit.
And could that help Seattle?
You know, Seattle, I think, has, again, that combination of the high-tech factor. So you've got some big tech companies there that are actually still doing very well and thriving. So I don't think Seattle's going to be hit as much. But definitely, you may see people in Seattle, if they're looking to get a house in Vancouver, maybe a vacation house. That could be a nice upside play. But I'm still looking for Seattle to be pretty solid because of the thriving tech economy.
And when you look right across the United States, what is the best market in your view, and what is the worst?
Well, I tell you, I live in Miami, Florida, and it seems like it's continually getting hotter and hotter. I do expect it to level out this year, especially at the super luxury price point of $3 million and above. And as far as some of the worst markets, I mean, you still have some counties in the state of Florida in the middle of the state that just haven't recovered. The outside Orlando areas, for instance, where our company is headquartered, a lot of those markets have really not recovered to the '07 crisis yet. So in the same state, you have the one I'm picking as the best and one that I'm kind of picking as underperforming.
And what do you see? We'll just stick with Florida if we can for a second, because there's been, of course, our dollar has been very weak. That's affected Canadians going to the state of Florida from this part of the world, not wanting to put up an additional 30%. The prices have moved, and worries about, I don't know, Donald Trump, for that matter. What do you see in terms of Canadians in the state of Florida?
Well, the state of Florida, again, because of the favorable tax laws, is still in an amazing state for retirement. And I see a lot of actually companies moving down there, financial services companies moving down there because of the tax benefits. I think sort of that, as they call it, the independent Republic of Miami, really sort of that area to Palm Beach is really growing. And I still think areas like Jacksonville, which are incredibly business friendly, are doing very, very well. And so I think overall for the state of Florida, I'm very bullish on the state of Florida for those reasons.
Jeff Taylor, thank you very much for joining us.
Thank you for having me.
Co-founder of Digital Risk.